tonight. So the US-Iran conflict has escalated fast. Strikes, retaliation across the Gulf, oil prices jumping, market swinging, and Bitcoin reacting in real time. We are going to break down what's happening, what could happen next, and how this impacts global markets, inflation, and crypto. Joining us later in the show is one of our long-term guests here on Roxom TV, so the Bitcoin Libertarian. He has been a Bitcoin educator since the early days, which means he's lived through every cycle, every crash, and every macro shift. He will bring a long-term and sound money libertarian perspective, so not just on Bitcoin price, but on geopolitics, war, inflation, and freedom in uncertain times. So today we'll cover the war, oil, recession risk, Bitcoin's role in global instability like this, strategies, the treasury model, and how AI is reshaping modern conflicts. So let's dive right into the first news of today's show. So the Middle East just changed overnight. The US and Israel launched coordinated strikes on Iran, and Iran's supreme leader is right now found dead. Within hours, Iran, of course, fired back, launching missiles across the Gulf. So there's actually a video how it looks like, but there is like a slight delay. So the hypersonic missiles, what they look like. So within hours, Iran firing back, launching across different countries. So that include Dubai, that include Abu Dhabi, that include Doha and multiple US bases. Oil prices have got jumped. If we hop onto the Brent crude oil, right now it's sitting at $78. There's a huge jump. Flights were cancelled, airspace shut down, and surprisingly, Bitcoin surged a little bit and back to $68,000 for a little bit. So let's break it down clearly what happened. So let's take a step back. What happened over the weekend? So on 28th of February, the US and Israel launched over 900 coordinated strikes inside Iran. So targets will include military bases, nuclear facilities, leadership compounds in Tehran. So Iran's leader was killed along with dozens of high-ranking officials. Donald Trump said the strikes were in response to imminent threats. He also said operation will continue if necessary. This was not a small operation. This was a major escalation instead. And within hours, many places were damaged, were destroyed. So Iran retaliated. Over 137 missiles and 29 drones were launched across the region. So targets mainly include the US bases in UAE. So here we have the picture. There's a strike in Doha. The second picture here is another strike in Dubai. And then the third one, of course, like aiming at Israel. So mainly US bases in UAE, and explosions were reported in Dubai, Abu Dhabi, Doha. Many missiles were intercepted, but the debris caused fires and damage. Dubai's airport temporarily shut down. There are more images of how Dubai looks like. Some of the luxury hotels in Dubai were on fire as well. So at least like one person is killed in Abu Dhabi from what we have seen from the images. And schools switched to remote learning, embassies closed, airspace shut down nationwide. Dubai, because like this is a major concern because like Dubai has been one of the safest place on earth. And yet right now the perception just shifted because like Dubai is not just a city, it's a global trade hub. So ports, airports, financial centers, like even minor disruption there has a global ripple effect. And this shows something very important. When tensions escalated, so let's go back to Dubai. So when tension escalated, even countries not directly involved can be pulled in. Allies matter, geography matter, and oil routes matter. And here's a big economic concern because like going back to the oil price, there's a picture of the Strait of Hormuz, because about 20% of global oil supply pass through this Strait of Hormuz. If that route, so this route is disrupted, oil prices will spike immediately, and that's exactly what we saw. Oil jumped 7 to 10% in early trading. Higher oil prices, what that would mean? That means higher gas prices, higher shipping costs, and more inflation pressure. This hit consumers quite directly and very quickly as well. However, there's a surprising turnaround. After initially falling, Bitcoin dipped a little bit, and then Bitcoin rebounded sharply. It jumped from around $64,000 to $68,000 within hours. That's roughly an $80 billion swing in market value. Like you may ask now, why this would happen? Well, because markets are betting that leadership turmoil in Iran may increase the chances of de-escalation. Under Iran's constitution, a temporary council takes over until a new leader is chosen. So traders of Bitcoin are simply thinking like a power vacuum could lead to negotiation, not immediate escalation. But this is very uncertain so far. So there are possibly two scenarios. So scenario number one is escalation will continue. Oil supply is disrupted because right now the Strait of Hormuz, Iran has closed the strait already. Energy prices would likely spike, so as inflation would rise and risk asset would fall. So that's scenario number one. And as for scenario number two, like Iran's stabilized leadership and military response might slow down, markets calm down finally, and risk asset hold gains. Right now, Bitcoin is moving really fast. And if further strikes happen, energy markets would react immediately. This is geopolitical shock. So, of course, we'll continue tracking every development very closely here on Roxom TV because what happened next will shape global markets in the coming days. But the next segment I really want to cover is even scarier than just like a few countries striking each other. So this strike between US and Iran may be the first major conflict where AI played a central role in the entire operation. So not just as a tool, but as a system that helped analyze, plan, and accelerate decisions. So let's break it down as this technology turning point. So what happened is that the US and Israel strikes in Iran targeted high-level leadership and military sites. The operation was described as highly precise, not large-scale bombing, more like a surgical strike. And behind that precision was data, a lot of data. So we're talking about like satellite images, intercepted communications, movement tracking, real-time surveillance feeds. And the key difference here is that the AI system processed that data at speed humans just cannot match. So let's break it down. And some call this like the kill chain. Like let's break it down simply. Like every military strike follow a few steps. So the first one is to find a target, and then you have to confirm that target and track the target, and fourth, of course, to strike the target. In the past, humans did most of that manually. Right now, AI speeds up almost every single step. Instead of weeks of analysis, it can take hours, and that changes every single thing. And here, because of this strike, I'm not calling this a war because only Congress could define this as a war. So it's more like a strike between US and Iran and Israel. So there are two major companies are involved inside this strike. So the first one is Palantir. Palantir. So think of Palantir as the digital battlefield dashboard. And why it was being used. So basically, is software connects satellite data. It connects signal intelligence, social media, financial records, and location data. So instead of separate reports, commanders right now, what they will see is one unified digital map. And like people, buildings, vehicles, basically all these data are connected. This is sometimes called the common operating picture. It gives decision makers a live moving map of reality. And then the second company we have to break it down is, of course, like Claude from Anthropic. Claude is a large AI model, large LM model. It does not fire weapons, but what it does is that it reads information, like huge amount of it. Thousands of documents, intercepted calls, foreign language reports. So instead of human analysts taking weeks to review this, AI summarize it in minutes. So commanders can just simply ask this question, like, okay, if we act right now, where will the target move? And maybe they could ask, like, what is the highest probability escape route? The AI runs all the simulations and gives probability charts. It helps optimize timing. That, of course, will reduce delay. And execution is also changing. So instead of sending expensive fighter jets, modern militaries increasingly use autonomous drones, AI-guided aircraft, and swarm systems. So these drones, what they can do is that they will adjust their flight path automatically. They will share their threat data in real time and operate even without GPS. So if one drone is jammed, others adapt instantly. This is called software-defined warfare. The hardware matters, of course, but the code is the real weapon. So in older days, there was more friction, so more delay, more human bottlenecks. Right now, with AI in the picture, AI will compress time. So the methods become like detection and then confirmation and then like strike immediately. It can happen extremely fast. That, of course, lower the barrier to action. And when action becomes easier, decisions may happen faster too. And that is powerful, but also extremely dangerous. So this is no longer just about Iran or the US. This is about the future of global power. If AI systems, they could find targets, they could analyze risk, simulate outcomes, and optimize timing, then warfare becomes data-driven. Silicon Valley is no longer just building apps, it's building military infrastructure, and that would raise some serious questions. Who controls that AI? What limits its existence? And how fast is too fast? So the bottom line of this war, sorry about that. Sorry for the language. The bottom line for this strike, the Iran conflict may mark a shift, like not just a military escalation, but a technological one. AI did not replace humans, but it now dominates finding. It now dominates tracking, analyzing, and optimizing. War is becoming software. And once war becomes software, the pace of conflict changes. The real question now is not just who wins on the battlefield, it's who controls the code. Of course, we'll be tracking this here on Roxom TV, how this developed and how AI is now being used in major battlefield. We will take a short break for now, and when we come back, we are diving into what OpenClaw founders said to younger people, basically not to waste time on crypto. So he did some very interesting move in the past. So of course, we're going to dive in. Do stay with us after the break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for sticking around with us. We're now diving into the world of crypto because crypto is much worse than just having a bear market. It's about talents leaving and capital rotating. And today, a top AI founder literally just told young people to stay away from crypto and just don't waste your time on any crypto. That wasn't a random troll. It was Peter Steenbergen, which is the founder of one of the hottest AI products right now, OpenClaw. And when someone at the center of the AI boom tells 20-year-olds to stay away from crypto, that hits differently. So today we'll break down what's really happening, why top builders are leaving crypto, why VCs are reallocating billions to AI instead, and what this means for the future of this industry. So what happened is basically on 26th of February, just like a few days ago, someone asked and tagged Peter Steenbergen on X and asking, like, what is your best advice for a 20-year-old? And his answer is really simple. Like, he didn't soften it. He didn't. Don't waste time with crypto. Like, I think he meant it, and this is not new because he has openly disliked crypto for a while. People mentioning Bitcoin in his Discord get banned. We covered that news last week here on Roxom TV, and here's another tweet from him on 27th of January, so a little over a month ago. So to all crypto folks, please stop pinging me, stop harassing me. I will never do a coin. Any project that lists me as coin owner is a scam. No, I will not accept fees. You are actively damaging the project. Now, The crypto community joked about it, but like behind that memes, that's anxiety for the crypto market, because when AI founders say crypto is not worth young people's time, that suggests something bigger. Like crypto is no longer the obvious opportunity. In a normal bear market, like we know that we are in a bear market, like for folks out there still denying that, like they are living on a different world, but like let's come to the real world. So people like in a normal bear market, people like to say crypto is dead, but this feels different. This isn't just price weakness. This is about talent moving away from crypto, capital reallocating and tension shifting. That's more serious than any previous cycle we have seen. And let's look at what's happening. The old crypto OGs, they're now talking AI every single day. Bitcoin miners are pivoting to AI and data centers. And if we look at certain projects, I mean, there are lots of project founders, they are now doing AI, like Eigenlayer developer, those advocate, they left one AI company. Multicoin Capital co-founder, so Kyle Semeny, publicly stepping back from crypto, moving toward AI and robotics. What he said, like he even said, crypto is not as interesting as once I thought. That, of course, hurts the crypto community. When early believers start walking away, like confidence of crypto, of course, it shakes. And this is not just about people, it's also about money, it's about capital. So, for example, Paradigm, one of the most crypto native VCs, is reportedly raising up to $1.5 billion for AI and robotics. This is the same firm that backed Uniswap, Lido, Optimism, and DYDX. If crypto was still producing huge early stage breakthroughs, of course they wouldn't have to pivot. But here's the reality. Infrastructure narratives are crowded. So there are so many narratives out there. We have seen many narratives, especially for the viewers who have stick around. So there are hundreds of layer one projects competing with each other, claiming to be the Ethereum killers. And then we have layer twos trying to take the crown from Ethereum. We have like DEXs, DeFi, like everything feels saturated. Venture data shows crypto deal activity falling for years. Meanwhile, AI is absorbing capital like a black hole, from chips to models to AI agents to robotics. AI is where growth stories are being built right now. So attention has shifted. I hate to break it to you guys, like crypto is usually very good at chasing trends. Whenever something is hot, someone launch a token around it. But with OpenClaw, something feels different, like something different happened. At first, crypto tried to meme it, so M-E-M-E, meme it. Then people started actually learning it, like installing it, writing tutorials, building AI workflows, and selling AI setup services. And when it comes to the offline events about AI, well, we have been seeing packed rooms, even here in Hong Kong, like full seats, standing crowds. So that's, of course, not hype. That's a migration of attention, maybe someone from crypto as well. And crypto people are really obsessed with AI, like because like crypto has a lot of independent builders. We're talking about developers, traders, content creators, and AI massively increased productivity. It writes code, it generates research, it builds content, it saves time. When your income depends on speed and output, AI becomes irresistible. And let's be honest, crypto innovation has slowed down drastically. AI is creating something new every single week. Crypto is mostly remixing old ideas. When one space feels stagnant and another feels very explosive like AI, so smart people, of course, they will pivot and they will follow that energy. And a hard truth, especially from OpenClaw founders. So, of course, his comment like this, it hurts because it simply reflects the reality. Smartest people are reallocating time, not necessarily abandoning crypto, but like diversifying their attention. We are in a period where wealth creation in crypto has slowed down drastically, but productivity from AI is exploding. That changes the incentive. So perhaps right now, what we should ask is that, like, is crypto in a temporary slowdown, or is it losing its position as the best playground for young builders? Because the markets recover, but attention is really hard to win back. And once talent leaves, it's difficult to rebuild that momentum. And for the first time in years, young builders may see more upside somewhere else than crypto. That's really brutal than just like us being in a bear market. Of course, we're watching where smart people would go. Speaking of like AI, there are more developments. This time is from China. Well, this is not exactly AI, but there are some new breakthrough from the China's latest phone, so Honor's phone, a smartphone, but this time with a robotic arm. And of course, like a humanoid robot teased on the same stage. So China's Honor just made one thing very clear. The smartphone war is no longer just about screens and cameras. It's also about robotics and it's about AI. And of course, like about the survival in a very tough market in smartphones. So let's break down what Honor just launched and why it matters. So at the Mobile World Congress in Barcelona, Honor showed off what is called the robot phone. Here's what makes it different. Like the camera is not fixed, as you can see. Well, let's scroll down to the next picture. So you can actually pull the robotic arm. So there comes the camera. And it pops up out of the phone on a small robotic arm. And yes, a motorized arm. Like it can log onto a person. It could track a movement automatically. It could follow subjects as they walk around. Like I'm sure a lot of viewers have seen DJI's Osmo's camera. So it sort of looks similar, but built into a phone. And here's the interesting part. You can talk to the phone's AI assistant. So if you ask a question, the camera can literally nod, like this camera would nod yes or no. Like it sounds small, but like visually, it's very different from anything else. So anything Samsung or Apple has been doing from all these years. Honor say it plans to launch it commercially in China in the second half of the year. And a lot of people, okay, when there's new breakthrough, new innovation, especially coming from China, people would like to judge, okay, this is so extra. Why do you need a robotic arm on a smartphone? Like, well, because like the smartphone market is very saturated. Like most phones sort of look the same. Most upgrades feel basically very extra, and consumers are holding onto devices longer. And 2026 is expected to be even tougher in a market like this. There's still a memory chip shortage. Prices are rising sharply. Device makers may have to increase phone prices. So that means demand could weaken. So what do companies have to do in a tough market like this? They try to stand out. And this robot phone is a clear attempt to grab attention. Even analysts say this looks like a marketing push to build brand awareness. Like, will it sell in huge numbers? Of course, that is still unclear, especially if it's very expensive or bulky, but it will get attention. And sometimes attention is just step one. And as for Honor's biggest strategy, like let's not forget, Honor is no small player in China. It has around 13% market share there, but like globally is much smaller. In Europe, its share was around 3% last year. That's tiny compared to Samsung and Apple. So Honor is pushing into the premium segment, not just budget phones, but the premium. That's where margins are higher. That's where brand power matters. And as for like Honor, they also launched the Magic V6 foldable phone. So here's how it looks like. This is clearly aiming at Samsung's Galaxy Z Fold line. Here's what it stands out. So this phone, when closed, is only 8.75 millimeter thick, almost the same thickness as an iPhone 17 Pro Max. One of the biggest batteries in a smartphone is actually inside this Honor Magic V6 as well. So Honor is trying to compete on thin design, battery life, and also high-end performance. The phone goes on sale in China in March, so international rollout will come later this year. Pricing has not been announced yet, but if it's too high, that could change. That could be a challenge. Now, here's where things get even more interesting. Honor also teased out a humanoid robot. Very few details, no deep demo, but enough to signal direction. The robot is expected to focus on shopping assistance, workplace inspections, and support, and more like a companionship. This is part of a much bigger trend. Chinese companies are moving fast into robotics. So Xiaomi, they have the Cyber One. Xiaopan, they have they have their own humanoid model, and many startups are entering the space. China is clearly positioning itself for a robotic expansion phase, and Honor does not want to be left out. So perhaps the bigger picture here, Honor is trying to evolve from phone maker to AI plus robotics hardware company. That is ambitious, but it shows how competitive the tech landscape has become. When memory chips are expensive, when demand is uncertain, and when Apple and Samsung dominate globally, you either innovate aggressively or you disappear quietly. So, of course, we'll be watching this market and how it becomes real sales growth here on Roxom TV. Okay, moving on to some kind of Bitcoin related news. So Michael Saylor announced that Strategy is increasing the monthly dividend on its STLC preferred shares to 11.5%. So that's a 25 basis point increase. This is already the 7th adjustment since STLC launched in July 2025. The next payout is March 31st. So now here's the key point. This increase is not random at all. STLC is designed to reset its yield monthly to keep the stock trading closely to its $100 per par value. In February, STLC dipped briefly. So on 5th of February, explicitly, it dropped to $93. They briefly during a broader crypto sell-off, so Strategy raised the yield to support the price. This is a built-in stabilizing mechanism. So it's actually not panic, it's a design. So question everyone is asking, why is MSTL doing so badly? Because STLC right now, it might look sort of attractive, but the MSTL common stock is under a lot of pressure. So the stock fell 14% in February, while Bitcoin fell nearly 20% during the same period. This is unusual, because MSTL is highly correlated with Bitcoin. Usually when Bitcoin drops, MSTL would drop more, but that's not what we saw from in February at the very least. There's also high short interest. MSTL is one of the stocks that are being shorted mostly on Wall Street these days. For MSTL, the common stock strategy, there's also very keen competition when it comes to ETF. So all these all these companies are offering the ETFs like IBIT, and also the macro pressure is adding a lot of weight, and growing skepticism around the leverage models around the Bitcoin treasury company. So this isn't isolated for the drop of MSTL. It's part of a broader downturn in Bitcoin-linked equities. So for the viewers out there, you might think STLC, now that the dividend rose to 11.5%, it sounds very interesting, but like here's what you need to know before investing. STLC, this is not a common stock. It's a perpetual preferred share. What does that mean? Like that means no maturity date, fixed monthly dividend, although it's adjustable, higher yield than traditional savings and lower volatility compared to MSTL. So right now it yields 11.5%. That's very high compared to money market funds. So some analysts would describe it as short duration, high yield digital credit. It's backed by Strategy's Bitcoin holdings. Although it's not FDIC insured, and it still carries corporate credit risk. So of course, this is not risk-free. It's just like structured differently. So what supporters are saying, like some people, of course, would like STLC a lot. They call it a new class of digital credit, a Bitcoin-backed yield instrument, a bridge between crypto and TradFi, traditional fixed income, and some even call it sailor's iPhone moment. The idea is simple. Instead of issuing common shares to buy Bitcoin, Strategy now issues preferred shares like STLC that funds more BTC purchases without diluting MSTL holders. So that is the pivotal moment that the supporters are so hyped about. But of course, there's still risk. Let's be clear. If Bitcoin underperforms long term, the whole structure gets pressured. If that servicing rises, forced selling becomes possible. Some Bitcoin treasury firms are already sitting on unrealized losses. The sector holds about $72 billion in Bitcoin, down nearly 50% from peak values. If volatility continues, we could see some consolidation, maybe even forced sales. But right now, okay, for the Bitcoin treasury companies, like over 170 public companies hold Bitcoin. Around 5% of the total BTC supply is on corporate balance sheets. Strategy alone holds around 717,000 BTC. Many investors still believe Strategy could hit 1 million BTC this year, but pressure is building. ETF flows are pulling liquidity, short sellers are active, MNAV discounts are widening, and volatility remains high. This is, of course, no easy time, no easy terrain. So many people are asking what could happen next. Like products like STLC, it may expand. We could see more hybrid Bitcoin-backed yield instruments. Regulatory clarity in 2026 is helping. So institutions right now are actually looking for yield. They're looking for digital exposure and structured products. But here's the bigger question we really need to ask. Are these instruments strengthening the system or increasing leverage in a very already fragile environment? Because if Bitcoin rallies, these models look brilliant. If Bitcoin stagnates or drops, stress appears very, very quickly. So that's the latest on Strategy and STLC, a higher dividend, a very volatile MSTL stock, and a company that continues to double down on Bitcoin despite global uncertainty. All right, so we will take a short break for now. And when we come back, we have our long-term Roxom TV guest, the Bitcoin Libertarian, to break down what this war means for oil, inflation, and Bitcoin's long-term outlook. So stay with us. We'll be right back.
Security matters. Zappo Bank. The only way.
Fernando, welcome. Great to see you again.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, everyone, welcome back to Roxom TV and thanks for sticking around with us. I'm very happy to welcome back a very familiar face to Roxom TV, our long-term guest and the Bitcoin Libertarian voice, so Fernando. He has been educating people about Bitcoin since the early days, long before the ETFs, corporate treasuries, or mainstream adoption. He has seen every cycle, every crash, every narrative shift. And what makes him different is that he doesn't just talk about price. He talks about the philosophy behind Bitcoin, like sound money, freedom, limited governance, and why Bitcoin matters in times of war, inflation, and global instability. Like many of you follow him already, and he also runs a Spanish community where he goes deep into macro analysis, AMAs, and long-term Bitcoin strategy. So whenever global tension rises or markets get chaotic, I like bringing him on because he looks at the bigger picture, not just the short-term noise. So Fernando, it's great to have you back here on Roxom TV.
Thanks for having me again. It's a pleasure for me to be here talking about Bitcoin and all the things that are happening. As you said, I'm not focused on the short-term price. Everyone who follows me and our show, they know that we don't talk about trading. We analyze more the big picture. And yeah, now it's a good moment to start analyzing the big picture related to the war.
Yeah, so here is a very conflicted time that we are in right now. But I have to say, the conflict between US and Iran, it shouldn't come across as a surprise, right? Because like tension has been building around for months. But like what surprises that literally on Saturday, okay, US decided to finally take action. So in your opinion, do you think we're just getting started with the whole conflict? Is it going to escalate from here? Or now that the leaders of Iran has been killed, do you think we're going to de-escalate from now on?
Well, or as you said, we already knew that this was going to happen. United States moved their whole army around the Gulf. They did the same as they did with Venezuela. So, and again, they attacked on Saturday, the same as Venezuela. What can happen in the short term with the war, if it's going to escalate bigger, I don't think. I think that we need to wait for this week. In Venezuela, when things started, everyone was saying that if United States attack Venezuela, Russia and China will make some moves, and they didn't make. Now we are on the same situation. United States attacked Iran. Everyone was saying previous to the attack, okay, if the attack starts, probably the World War III starts. China and Russia will get involved. And I don't see China or Russia getting involved in a war, in a huge war, despite of some, of course, sayings from Russia that is not, or China that is not good to attack a foreign country or something like that. I don't see them involved in the conflict soon. So let's see what happened this week. In my opinion, it doesn't seem to be a long conflict because Iran, I don't know if they can keep the conflict for a long time. We saw it last year when it was only attacked by Israel. So if not any other big superpower is involved, that I don't think that they are going to get involved, the conflict might be short in time. But let's see how it escalates.
Yeah, one thing I find one thing difference between Iran and Venezuela, because like Venezuela is a much easier target, like geographically speaking, is a much smaller country, and Iran that is like basically geographically is surrounded by mountains, so that makes the attack a lot more difficult. So, in your opinion, do you think like this war it could maybe drag for months before the Iran regime finally fail, before the full de-escalation finally happen? Like, what is the timeline that you expecting here?
I don't know if this is different because let's say what happened after the attack, Iran started attacking the United States allies on the region. This, of course, didn't happen during Venezuela's attack because most of the countries surrounding Venezuela are not allies from Venezuela, but they are not gonna attack a South American country, the Venezuela. So Iran start attacking UAE, Qatar. So probably it made make the things different from Venezuela because Iran has bigger gunpowder, a bigger army, and more firepower than Venezuela, and also can start attacking the allies of United States in the region. And this can probably trigger some bigger involvement. And in this case, United States move troops. It can take months to deploy all the operations. So let's see what happens. But of course, it's totally different that happened in Venezuela. United States went, attacked, pick up Maduro, and everything was finished. Now it's different. Iran strike back against the United States allies. And of course, I heard today in the morning that Trump has communicated with the government of Iran, and they say that they will cooperate. But again, we don't know if it's true or it's something that Trump says to keep the markets calm. Let's see again how it moves this week.
Yes, we shall see. But like personally, I was like you said, like Iran retaliate and they attack a lot of the UAE countries. So Dubai and Dubai is one of the places that I was absolutely shocked. So was Abu Dhabi, because like these two places, these two regions are considered some of the safest cities around the whole world, and yet they were not directly involved in the war. They were being attacked, and a lot of the buildings are damaged. So, in your opinion, like, do you find it ironic that like some of the safest cities right now are being affected and dragged into those conflict between U.S. and Iran?
The thing is that, of course, the safest in terms of crime, but being so close to the point is that Israel, let's put Israel is really prepared to receive an attack because they have a lot of power that they were building to stop the bombs. But these countries never develop like a wall or like a defense system against bombs, so they can be attacked, and they are close to Iran. So I think that this attack, Iran say, okay, you attack me, we are going to attack your friends in the region that cannot be protected the same as Israel. So I don't feel it ironic, but on the other side, yes, I see. Usually we say Dubai is super safe, Doha, Qatar is super safe, and now they are getting attacked. In fact, Doha was attacked last year as well during the conflict. And I see that the airports are now closed. Qatar stopped all the sports in Qatar. In fact, in few days, Argentina national team has to play a game against Spain, and I think that this is suspended. But yeah, that's what Iran did. Like again, United States attack, and Iran say, okay, we are going to attack your friends on the region, and let's see. But yeah, it's I don't want to say ironic, but sometimes you are in the safest place of the world and this can happen, especially in so hot region, talking about geopolitics.
Yeah, so from your perspective, where does that leave Dubai? And I do want to focus on Dubai specifically because like Dubai is one of the biggest financial hubs around the whole world. And when it comes to digital assets, is extremely active in region like Dubai. So some of the hotels or buildings got damaged. It's like there's a luxury hotel caught on fire. So that absolutely shocked a lot of people because like the people who would stay in a hotel like this, that means they are wealthy people or basically well-known people. So where does that leave Dubai? Do you think Dubai will have a massive comeback in maybe years to come?
I think that most of these videos, I saw a couple of them and I checked and they probably were made with the AI. So I checked some of them. I don't know. I didn't have time to check all. I just saw the Burj Khalifa on fire or something like that. I don't see. I didn't see if they were real or they were AI generated. But yeah, of course, it hits. Let's say many people. We all saw in the last years from people from Europe, especially UK and France, flying to Emirates because they were better in terms of safety. They were better in terms of taxes. But yes, now they face this issue, and let's see how people can react.
Yeah, so like in other financial hubs around the whole world, I suppose Hong Kong, there is a narrative that people are talking, at least here in Hong Kong, because like we both live in this amazing city, right? So do you think like now that one of the financial hubs around the whole world is kind of like under attack, do you think that would drive capital back to Hong Kong, maybe from Dubai, or maybe talents from Dubai to Hong Kong?
This is something that I don't know if it's going to happen immediately. So let's see how escalates the conflict and how is Dubai attacked by the Iranian army. Again, I don't think that Iran is going to attack so much Dubai. First of all, because the Saudi Arabia army is going to join United States attacking. So if Iran attacks Dubai, they have more to lose than to win. I think that these attacks that Iran made to the United States allies were more like, okay, you attack me, I attack your friends. But I don't think that Iran, but they can do whatever they want. Iranian regime blew up 2 buildings in Argentina in the 90s, and they are savage and they can do bizarre or savage things. But I don't think that they are going to just send a missile to destroy the Burj Khalifa. But again, we need to see these things, the movements of capital or talent or people. It takes time. So if the conflict escalates, let's say for 6 months, 1 year, probably many people will reconsider move to another places like Hong Kong or other Singapore or other places. But I don't think that immediately now people can make a decision. And again, I don't think that Iran can go further in attacking these cities.
Yeah, one thing I find it really shocked because like I've been seeing all these videos and Roxom TV on X has been posting a lot of footages is that the missiles are flying around on the whole Middle East sky, and some of my friends, especially who they are in crypto, they moved their bases to Dubai. So that was the first time that they have ever witnessed like sirens and missiles flying basically in the skies and basically so much bombing noise. So of course they find it really, really scary. So if I were in their shoes, I'll be extremely scared as well, and I don't know what to do. So like, of course, my heart goes out to all the people being affected in the region like that. But like, since we are talking about more the financial aspect here on Roxom TV, let's just focus on that. Like one topic people like to discuss a lot is the oil price, because Iran is like controlling the Strait of Hormuz. So if that, basically for the viewers out there who don't know what we are talking about, like the Strait of Hormuz is a very narrow water bay. So if Iran basically stop the flow of the oil, and they'll be controlling the 20% of entire oil supply. Right now, the situation is that Iran has closed the Strait of Hormuz. So do you think how this would translate to oil price? Do you think we could go higher from where we are? Because like from what I just checked an hour ago, it has been going up drastically as well.
Yeah, usually when these conflicts start, no matter where, prices of gold, oil went up. In fact, today the futures were, I think that oil jumped around 10% in the futures. gold, I think 2.5%, and all the markets in the futures were down around 1%. So yes, of course, it can hit. Any conflict of this situation brings the commodity price up, gold, oil, food, and especially in this region where the oil is produced. And if they block this strait, of course, it's going to take the price, the oil price higher. And for United States, it's going to imply more inflation because it's a country that, same of Argentina, that they have a lot of trucks, they need a lot of oil, they need a lot of energy, and if the prices go up, of course, it can traduce to the prices of everything in the economy. But yeah, usually when this conflict started, most of the money goes to commodities, oil, gold, food, and all this stuff. And of course, today, since the attack started, the futures of oil went up again around 10%. So let's see how it happens today when the markets open in United States.
Yeah, because when it comes to the inflation data, of course, like oil price play a massive role in how the U.S. Calculate the inflation data, because like the official figure is around like somewhere 3%, but like if the viewers of Roxom TV who have traveled to US for like maybe the past, especially like after COVID, then you will know the inflation is like of course a lot higher than what the official figures are saying. So do you think like right now the oil is kind of like at least 20% of the oil supply is being transferred on the Strait of Hormuz? Do you think, okay, oil price, first of all, we know is going to be very volatile, but does it add more weight to the chances of US going into a recession? Or you think like US is basically the biggest economy in the world, then there's no way US will go into recession?
I don't think so. I don't think that the oil can play a big role if United States is going to recession, especially because now they have the oil from Venezuela, so they don't depend on the oil from Middle East. I think that if United States go into recession is for other factors, like for example AI, and but I don't think that oil can play a role in recession. Again, let's see how the conflict evolves. Usually now things are moving fast. Probably, I don't know, next week, war is over and we need to discuss other things. But I don't think that the prices, this conflict can take United States into recession.
Yeah, because like for conflicts like this, attacks like this, we are trying to avoid the word war because like apparently only Congress could define the definition of war. So right now it's just like US striking on a foreign country, on Iran. So like US, like they have so many internal problems because like you and I, we both in Bitcoin because we know the government around the world, not just US, is on borrowing time. They are on massive debt. So US is just like happen to be one of them, but like just like any other countries in the whole world, like borrowing all this money from taxpayers and going into strikes like this, do you think is adding more like basically the whole financial system or global financial system just become more fragile than ever?
Of course, because they don't, the wars or the attacks, if you don't want to call a war, they are not financed by taxpayers. They are financed by money printing because you cannot sustain months of military attack just on taxpayers because you know that the budget of United States is not even covered by the taxpayers. So if you go into a military action like this, that takes a lot of extra resources, of course, what is going to happen now is that United States is going to print more money. And we all know what happens when United States or when there are more money printed. And we already know that United States has a big debt crisis. Debt of United States is reaching around 120% GDP ratio. And that's why we see that the gold is spiking, the silver is spiking, and I'm sure that the next one is going to be Bitcoin. So this war over time will make United States go more in depth, print more money to finance it. And of course, this is not good for the people and will trigger many prices of like gold, silver, or even Bitcoin higher. Even though Bitcoin, the last year, we didn't see very correlated to the M2 supply, but sooner or later, when you print a lot of money, of course, Bitcoin price goes up.
Yeah, because one thing about Bitcoin price is I find it very interesting because like initially when when the news of the strike broke out, Bitcoin actually dipped to $64,000 a little bit. But like yesterday when I checked, it bounced quite fast. So it bounced to $68,000. So right now when I check again, it's around 66K.
Yes.
So why do you think this action would happen? Is it like how you expected, or is a little bit out of order in your opinion?
No, it's really it's what happened. Usually, the attack happened on the weekend. So usually, when this happen, when a war or a conflict happen around the world, most of the capitals needs to be liquid as possible, because they, for example, of course, the markets are heated by the conflict, and there are going to be a lot of margin calls triggered. So they need to be liquid to not get liquidated from the margin calls of the positions. And on weekends, there is only one thing that you can sell, that is Bitcoin. So that's why it triggers the sell, the massive sell. In fact, it went down under 63. When I checked on Saturday afternoon, was around 62,600. Then it went up when they recognized that the leader, the Ayatollah, has been killed. The price rebounded and now went back around 66. But yeah, this is the Bitcoin is one of the only assets that operates 24/7. So that's why when something happened during the weekend, of course, the first one affected is going to be Bitcoin, because it's the only one that you can sell at the moment to cover probably future liquidations and to get cover for what's going to happen on the Monday morning. So that's why Bitcoin took the hit first, but then recovered, and it might maintain a little bit. Let's see what happens when today open the market. But I think that this is not a Bitcoin problem. This is just a problem when a weekend, when something that unexpected or probably expected happened, but happened by surprise, and the big capitals needs to get liquid, and the only thing that they can sell is Bitcoin. So that's the point.
Yeah, I mean, I happen to be agree with you. Like, because like not just this strike between the U.S., Israel, and Iran, but like if we take a look at the wars that happened before, maybe the Russian attack on Ukraine, like initially Bitcoin would dip, but like Bitcoin always bounce back. So from what I understood during this conversation is that like regardless, like inflation takes up again because of the oil supply, like of course this is going to be long-term bullish for Bitcoin, because that's what Bitcoin built for. And like as for war, like there is always a narrative of digital gold. So regardless, all roads lead to Bitcoin. But like I kind of want to shift gear a little bit, and I want to dive into MicroStrategy for now. Like I'm not sure if you get a chance to basically get in touch with the news, but like MicroStrategy raises STLC dividend, and MSTL stock just like keep falling. Like basically, what's the reasoning behind, in your opinion? Why would this dynamic happen?
The fall of strategy, why the price of strategy is falling?
Yeah, and then preferred stock, because yeah, I mean that there are a few different financial products from MicroStrategy, like STLCs being one of them.
Yeah, STRC is not falling. In fact, last week it reached the par of 100. The thing with STRC, for all the people who is watching and they don't know what is STRC, is something called preferred stock. So you buy it, and strategy will try to use it as a stable coin. They try to get the par around 100. So if the price goes, and of course this preferred stock, it pays you a dividend. Now it's 11.5% a year. So when the price goes down, what they do is to raise the interest rates in order to get more people to buy this preferred stock. When the price goes up and crosses the 100 US dollar par price, they have two options. One option is to reduce the interest rate, but the other option, that is the option that they want, is to get more shares, to emit more shares of STRC, and all the money that they collect from there, they use it to buy Bitcoin. So this instrument is really working really good, especially now during the bear market, because it's made for people who wants to have an exposure to Bitcoin, and not even to Bitcoin, because you just buy the preferred stock and you get a cash flow of 10. Now it's 11.5% a year. So it's very good because you are not attached to the volatility as the same way if you buy the MSTR stock, that of course it is reacting to the price of Bitcoin. One of the things that we saw in the last weeks for strategy is that it started to behave the way it was created, because strategy was created, the stock, not created the stock, but all these Bitcoin treasury company stocks are based on that the stock offers a premium from Bitcoin. So it's called the MNAV. Let's say if the MNAV is 122, it's like all the value of the company is 20% more or 22% more than the Bitcoin that they hold. If they keep the MNAV higher, what they can do is to sell stock at better price to buy more Bitcoin and accumulate Bitcoin per share. And this, what does, let's say for a strategy, it makes the stock price react different than Bitcoin. Let's say if Bitcoin goes up 2%, usually strategy used to go up 4%. Of course, if Bitcoin go down 2%, usually strategy went down 4%. What happened in the last year, strategy didn't behave like this, so it lost the attraction. That's why we saw the MNAV went down super fast. But in the last, let's say, months or weeks, now when we see that Bitcoin price goes up 1%, strategy goes up 2%. And on the other side, when Bitcoin goes down 1%, usually strategy goes down 1%. So this is interesting to see that strategy now is trying to behave the way it has to behave, and it's ready for proper bull run when Bitcoin price starts going up. But Stretch is an amazing tool because it lets people put money there and get a fixed return, as if they had a savings account. Now the savings account pays you like 2%, strategy pays you 11.5%, and they get the money. When they get the money, they buy Bitcoin. So that's the instruments, the thing. I think that now strategy is, again, after what we saw at the end of last year when MNAV went lower than 1 and all the people were like, oh, what is going to happen if Bitcoin goes down? Remember that now Sailor or strategy is with unrealized loss from Bitcoin, from their Bitcoin holdings. And people were saying, oh no, if they go down lower than 76K, they will liquidate Bitcoin. And now people say that nothing happens. that, again, Bitcoin price can go down up to 8,000, and even though strategy doesn't have to sell the Bitcoin. So I think that now people see how strategy is reacting to the drop of the Bitcoin price and get confident again to invest, especially in stretch and also in the strategy stock.
Yeah, I really like how to add on about the MNAV and also the misconception people out there, because like they happen to think, okay, the average cost for MicroStrategy buying a Bitcoin is like 70 something K. Like once they drop that level, then MicroStrategy gonna be under a lot of under deep water. But like at least that's not what we have seen. And throughout 2026, I mean, right now it's 2nd of March, but we have seen purchases from MicroStrategy, and they are like billions of dollars of purchases of BTC. So, like, my next question for you is like, since there are, okay, back next year, back last year, like Bitcoin Treasury Company, it was such a narrative. It was so hype, and a lot of companies are trying to follow what MicroStrategy did. Like, what makes strategy different, and what makes like other companies maybe like underwater in your opinion?
Well, strategy, what is different from strategy is that is the first one. So they have the advantage of the first mover. I think that no company can compete with strategy, because strategy now has, I think that around 717,000 Bitcoin. So it's almost impossible for other company to get to that level, because if we know there will be 1 million more Bitcoin to get mined to the year 2140. So they have the advantage of the first mover, and they have built a lot of instruments to raise capital and a lot of financial instruments to offer to the different people, that different investors, in order to raise money to buy Bitcoin. Plus, they have built this cash balance, so investors can get can rest assured that they will get paid their dividends. Plus, their debt is they are like, their debt is, I think, is 10% or less than 10% of their assets. So it's really under leverage. So on the other side, the other companies, I think was a bad year for the Bitcoin treasury companies, because of course there was the first year where a lot of people start adapting this strategy. Of course, the market and the markets need to understand about that. That's why we also do this, and we try to explain to the people what are these companies. And Bitcoin price going down, of course, hit very hard to these companies. But I would not say that they are under the water. I think that the market will recover the space of treasury companies. In fact, we saw Stripe that they are also creating instruments like strategy. And in another part of the world, Smarter Web company went public in London. They acquired another company. I think that it's a really early market. It's a really early industry, the Bitcoin treasury companies. We need to see the Bitcoin treasury companies as we saw Bitcoin in 2015, 2014, where were super volatile. People didn't understand what it was about, and any bad news hit hard on the price. I think that I am a big supporter of Bitcoin treasury companies, because they are the way that we have to reach the hyper-Bitcoinization faster. Of course, there will be this kind of moves, the volatility, but it's part of the game.
Yeah, that leads me perfectly to the next question. Because, like, what these Bitcoin treasury companies do is that they will just like buy Bitcoin and use that money to basically raise shares and use that money to buy more Bitcoin. So that's all it does. But, like, in your opinion, like, what is the financial aspect or financial incentives for you to maybe purchase MicroStrategy or some other Bitcoin treasury companies instead of just buying directly Bitcoin?
Really good question, because of course I'm a Bitcoin maximalist. So of course, no financial advice, but what I always suggest is to buy Bitcoin, not to buy ETF or treasuries or any other instrument, because these instruments are not Bitcoin. You have exposure to Bitcoin, but you don't have Bitcoin. The only way you have Bitcoin is if you have Bitcoin under your own custody. You have your keys. Is the only way you have Bitcoin. But these companies, not anyone is a Bitcoin maximalist, and no anyone understands Bitcoin, and no anyone wants to protect their keys. So, and other people wants to get some kind of leverage. So, if you invest on the stock of Bitcoin treasury, it's like you are investing on Bitcoin with leverage, but without the risk of being liquidated, because you are invested in a stock. You are not getting leverage. You just get leverage because of the nature of the stock. That's investing on a stock of a treasury company. Second, if you go to these preferred stocks that now only Strategy and Strive, and I think that Metaplanet also have, you invest and you get a fixed return. You get a fixed return and you get rid of the volatility. So some people wants to, okay, I think that Bitcoin is going to go up. So I'd rather, instead of going to trade Bitcoin with the leverage position, I buy Strategy because I think that it has leverage, but if it goes down, I'm not going to lose the money. I'm not going to get liquidated. Other people say, I don't want to be exposed to the volatility. I just want a fixed return. Not only people, companies that they cannot, or they don't, or like mutual funds. And of course, they put on Stretch and they get a fixed return of 11.5% that they defeat the inflation, because we know that the real inflation is not 3%. It's around 8 or 10%. So if you put your money on this stock, on this instrument, you get more than the inflation. And that's I think that is the big reason. And on the other side, and you get exposure to Bitcoin and many other, for example, many other funds, let's say a mutual fund or a fund from a sovereignty fund, they cannot buy Bitcoin because on the constitution of the fund say they just cannot buy this, and this. So as they cannot buy Bitcoin, they can get exposure to Bitcoin using these instruments. So of course, I have Strategy, but as a speculative asset, of course, not as Bitcoin, but a speculative asset, because I like what Sailor is doing. But of course, nothing of this replaces Bitcoin, but are a great tool to drive a lot of capital, institutional capital, to Bitcoin. That is that's why I support the. On the other side, if you want to be, I want to say like this: Bitcoin is for your retirement. Treasury companies are to get more money, more fiat in the short term if the market goes up. That's the thing.
Yeah, you brought up some really valid point, and especially I like how you mentioned some companies, they have the regulation, they have the rules, they just simply cannot be exposed to Bitcoin directly and putting Bitcoin on the balance sheet. So like MicroStrategy is kind of a no-brainer. So like speaking of MicroStrategy, there is also a goal from Michael Saylor, particularly himself, because like he's trying to reach that 1 million BTC. Right now, like they have more than 700,000 BTC on the balance sheet. Like since we have a Middle East strike going on, there's so much volatility. Do you think this would basically harm or hurt MicroStrategy pathway towards that 1 million BTC, or you think like basically MicroStrategy has so much cash on the balance sheet that wouldn't change the whole plan at all?
Sailor is relentless and is crazy. That's what I like him. So, and he's obsessed on getting this million Bitcoin. Of course, when the price of Bitcoin goes down, or these uncertainty times, is not easy for him or for Strategy to raise capital and buy Bitcoin. Of course, but if we see that even now, in the middle of a lot of uncertainty, a global uncertainty, in the middle of a bear market, with Bitcoin price going down, with all these like people who come out of the caves and now start saying Bitcoin is going to zero, strategy is getting liquidated, he managed to rise, let's say, 50 billion US dollars per week in this time when we have extreme fear, and he can buy Bitcoin. In fact, today he will announce another purchase of Bitcoin of the week. I think it's going to be around 500 or 700 Bitcoin. Imagine what will happen when the bull run comes and the sentiment of the market change. He will be raising more money and he will be buying more Bitcoin. I think that sooner or later he will reach this goal of 1 million Bitcoin. And for the people is don't if you are scared, if you don't like Sailor, okay, you still can buy Bitcoin by yourself, and don't sell Bitcoin to Sailor. That is not a financial advice, but is what happens now.
Yeah, I mean, I personally hold MSTL as well, and of course, I hold BTC on my own custody, which has been one of the best decisions that I've made in my entire life. Right now, I kind of want to shift gear a little bit, and I want to talk about AI. Because AI right now is actually being used in military decision making. Like a prime example that I could offer is basically the how US strike how US strike Iran, the whole situation going on. So AI is heavily involved in the whole decision making. Like, do you think this is actually making moral sense, or it's just like basically helping the war to be more precise and less killing people? The whole purpose of AI.
Well, then the point is that AI is not only used by the army or US. I think that everyone used AI. Of course, I saw a graphic the other day that 84% of the people in the world don't use AI yet, but all of the people that I know use AI. We use AI on the daily basis, and of course, if you want to run a military strike, you need to be precise to reduce the number of casualties and to make the most of the attack. So that's the way. But I heard last week, that Anthropic, or I don't know which company, they refused to create autonomous weapons for the United States Army. So yeah, it's like everyone use AI, and also the army is going to use it. What I hope it doesn't become the Terminator one.
Yeah, I mean, AI is a little bit like a double-edged sword. So it could be really good, but also it could be really bad. Because this sort of remind me of what I saw last week. So there was a research or like an article named 2028 Global Intelligence Crisis. Of course, that caused so much panic in the market. Like the AI, basically what the research is suggesting is that by 2028, the unemployment rate will be well above 10%, and a lot of white collar jobs will be replaced by AI. Like, are you scared of that idea, or is just like AI is inevitable? Like, if we don't use AI, we are basically out of the competition as well.
Well, this I was speaking about that with Hank on Friday in his show. I think that is inevitable. AI. We cannot stop AI. And of course, it's going to bring a lot of pain in the years to come, because, as you said, it will remove a lot of white collar jobs. A lot of companies will realize that they can do 3 times of the things that they do with half of their staff. And of course, they will proceed to, because like companies are not non-profit organizations, so they will reduce their workforce. But on the other side, I think that when these things happen, they bring opportunities, and the market always find a way. Imagine, I think that we are living, of course, I didn't live on that time, I just studied at the university, in the Industrial Revolution. There was the same fears. The fears that the machines were going to do the job of people, the unemployment was going to rise, everything was going to be critic. And of course, it probably in the first years, it happened, this problem. But then the Industrial Revolution brought us the biggest economical growth of our history. So I'm not afraid of AI. I think that is inevitable. We cannot stop. And it's a good way for us. It helped us a lot to learn a lot of things from our house. I think that all these people who is curious, I was reading the other day a post of a friend of the Bitcoin community in Spanish, that he was saying now for the people who usually were accustomed to be self-employed, autonomous, it's a great time, because I've been working by myself since I was 18 years old. So for me, it's an opportunity because I have this tool now that I can create more and more things with the half of the time or 10% of the time. So I think that, of course, these years to come are not going to be easy, but at the end of the day, markets will adjust everything. And again, we cannot stop AI. AI makes our life better. So we don't have to stop it.
Yeah, so speaking of evolution, that is like a perfect segue to my next question. Because as you mentioned, humans have gone through evolution for centuries. There's always some breakthrough when it comes to technology. Like you mentioned, maybe the industrial technology coming through, and a lot of people were scared. So another evolution that we sort of witnessed is Bitcoin miners. So Bitcoin miners pivoting to AI. Like, I want to ask you personally, because you, as a Bitcoin maxi, do you like that or not? Like Bitcoin miners pivoting to AI and building all these data centers. Is it a good thing or bad thing?
It's a good question, because there is a huge controversy now, especially for the haters of Bitcoin, say that, oh, now check the companies that now they are pivoting to AI data centers. What they can do, you doing that, they can get, of course, I'm not a supporter of the theory of the cycle, but let's pretend that the cycles existed. So in the previous cycles, when the bear market come, what do mining companies have to do? Sell their Bitcoin, sell their treasuries or the stack to cover the cost because of the bear market. Now, let's say it's not profitable for them or so profitable to mine Bitcoin, but they can have like another source of income, that is AI data centers. So what they can do is they can open this other business income and another business stream of income that they can keep mining Bitcoin even though there is a bear market and they lose money mining Bitcoin. So they have they found this other source of income that is AI. And they keep mining Bitcoin because we saw that there was a big drop on the hash rate at the beginning of the year, but the last difficulty adjustment was 14% up. It was one of the biggest difficulty adjustments up in the history of Bitcoin. And in fact, on this week, there is going to be another difficulty adjustment up. This means that the hash rate is going up. So there is more energy coming to the network. So it means that the miners are still mining. So that's the point. I think that it's not bad. First of all, I'm not a person who can say, okay, no, the miners have to do this. I cannot involve on their business. They have to make money. They have families to feed, employees to pay. So if the decision is during the bear market, we can switch a little bit to AI and we can keep mining, we can keep adding hash rate, even though this business is now not in profit, I think it's a good idea. It's something that I would do as a business owner because I can keep making money that can allow me to keep running the other part of the business, even though this part of the business now is in negative, is in loss. But in a couple of years, now I think that the cost of mining one Bitcoin is around 60,000 or 70,000, something like that. They are mining one Bitcoin for 65,000 US dollars, something that in 5 years, 10 years will be crazy. So when Bitcoin hits 1 million, it's going to be crazy. So I think it's a good way to keep mining, but they now have a new revenue stream and they don't push the companies to sell their Bitcoin to cover the costs.
Yeah, I think that makes a lot of sense. Like if I were in their own shoes, like seeing that financial, like extra financial incentives, of course, that looks really attractive indeed. So Fernando, it has been great talking to you. Thanks for your time. So for our viewers out there who want to know more about your perspectives on the market, or maybe just like listen to your podcast a little bit, you have a Spanish community out there. Where's the best way to reach out to you?
Well, you can find us on THE Bitcoin _ is our X in English. We also have our YouTube channel in Spanish, Libertarian BTC ESP is in Spanish. We also have the channel in English that I have a little bit abandoned because I've been focusing a lot this year to grow the channel in Spanish, that we already have a good traction. And I'm coming back to English this month. Our YouTube channel in English is Libertarian BTC. So you can go there and you can check all the things that we are doing. If you speak Spanish, we have a daily show in the morning of Hong Kong, at 10:30 a.m. Hong Kong time. And every day, 9 p.m. Hong Kong time, I have the podcast that is recorded. That's our channel in Spanish.
Amazing. It has been great to have you on the show, joining us again on Roxom TV. So my show is from Monday to Friday, starting in 3 a.m. Eastern Time. My show of today will end here, but like there'll be more shows from other hosts here on Roxom TV. Do stay tuned. Thank you guys for watching.